Good morning, traders. I'm Michael Sabo, Senior Market Strategist here with RJO Futures on April 1st here. Happy April Fool's Day. Bringing you some commentary here in the energy markets. And what we got going on here is no joke. Crude prices are selling off here a little bit. We're seeing some follow through here yesterday. We started the week off here on a much weaker tone, and we're getting that follow through here today. Crude prices are currently, the May oil trading down around $100.65 a barrel. We're down about 92 cents right now. Taking a look at the Brent, that's off also. We're around 106.87. That's off about 89 cents there. So really seeing that Brent WTI spread closing in, narrowing there quite a bit. Nat gas off about 6 cents, complex weaker as well. We've got RBOB off about 1 3/4 pennies, and the heat's off about 1 penny right now. So basically weaker tone across the entire board. Now, last night we did get out some data out of China, their manufacturing index there, a little bit weaker than expected. And it's basically confirming stuff that we already know, that we're kind of continuing to see a slowdown there in China. And I want to talk about our stock market here today, which is a little bit firmer here. But yesterday, Janet Yellen coming out and basically confirming that the market is still much weaker than anticipated, and that they still see extraordinary measures basically to continue to support it. So in other words, even though we've got that tapering going on here, I think certainly by her verbiage there suggesting that, hey, this market isn't still in that great a shape. They're going to continue to still do things to help prop this market up. She made comments about the labor market and looking at the unemployment. It's still much higher than where they would expect it to be at right now. So, that leads me to believe that obviously, you've got a market that is being held up here artificially, something we've known here for some time. And I'm talking about the stock market. At some point there, if these attempts to keep this thing propped up start to fail, you could see things coming down there with a vengeance, and I think that'll affect a lot of markets. Looking at crude oil market, though, on its own merits here, just on the supply and demand side of things here, again, I think your demand still remains to be very questionable, and supply side appears to be ample. We've seen 10 consecutive weeks here of builds. Last week, we saw a build of 6 million barrels according to the EIA data. We've got EIA data coming out here tomorrow morning, and they're looking for yet another build. For this time of year, we're only running off about 3 million barrels shy of our all-time high. So again, I think you got plenty of oil out of there. Now, oil has been flowing out of Cushing's there quite a bit there, so we have seen the stocks there come down, but overall total stocks appear to be ample. Barron's had an article out where they were talking about the oil market, and not anytime here in the near future, but their overall more longer-term projection for oil, they see oil prices down around $75 a barrel. And they think within the next 5 years here, we could actually be, and probably will be, an exporter of oil. So I think, again, that plays into a lot about what I've been talking about in these posts. I talk about it in the eView, which if you're not getting that, you should sign up for it. That's our bi-monthly newsletter. It appears here that even in light of, kind of being in an administration that is kind of unfriendly to big oil, yet you still look at our production, our daily production levels continue to increase year over year. Production continues to go up. So in other words here, we've got a lot of oil. And I think it's going to translate here over time. I think it's going to take a lot of work, but I think oil prices are going to continue to move lower. So I think the way to be positioned here in the short term right now, I think you should be positioning yourself here to play oil on the downside. That's my recommendation. 200-day moving average coming in around 97.25. I think that's where we're heading towards. Short-term technical indicators are overbought at this area. And I think once we break the psychological level of $100 a barrel and we start to see some closes below that, we could get some continuation. So if you'd like to talk about some ideas and some strategies, give me a call, shoot me an email. I've got some for you. I'd be more than happy to go into detail and share with you those ideas. Remember to give me a call. My number there is on the screen. Futures and options on futures may involve substantial risk and may not be suitable for all investors.